Welcome, everyone. Welcome, everyone. All right. So for those who are joining us for the first time, I am Suzanne Minar-Nukawa from the Trade Speakeasy. And once a month, getting some feedback there. And once a month, we do a focus on cryptocurrencies and what's happening in the global markets and with cryptocurrency. And just what has been happening the last couple of months, we felt that it was important that we took some time to focus on what has been going on with, now the conversation around FedNow and also CBDCs, so central bank digital currencies globally. And with everything that has just, the last, few months been going on between Russia and China and the macro landscape, it has become more urgent that we focus on some of these issues just because of the changing dynamic of the strength of the US dollar and where the US dollar is going in relationship to being the reserve currency. So one of the things that I thought was really interesting and that Winston and I spoke about prior to, in our pre-meeting. So in our pre-meeting, we were having a conversation and I was just sharing with Winston, it's interesting because 2-3 years ago, more than that, I mean, before the whole COVID situation, when Trump was still president, there was a lot of conversation around the trade wars with China. And so one of the big questions was, where was China trying to go next? Because of the fact that they, being that they have this, one China focus, they have a very nationalistic focus, and they wanted to increase their power as this trade war had been going on between the US and China. And so oddly, at that time, there was the Bank of England governor came to the United States, and at Jackson Hole, at one of the FOMC meetings, he basically came out and said that he really thought that we needed to move towards a kind of, he didn't use the word global currency, but a synthetic hegemony currency. And so basically this kind of other currency that wasn't specifically tied to any one central government, but that could be managed maybe by a multiplicity of governments. And that by having this, this like third currency that wasn't specifically tied to one nation would give power to that currency so that those that agreed with the model of transparency and movement and its baseline would allow those countries to work more closely together without being tied to any one specific country being, from his point of view, it was that, one country wasn't constantly being empowered over all the other countries by holding the central, the world reserve currency. So this was very surprising for somebody to come to the United States at an FOMC meeting at Jackson Hole and to kind of share that in a public speech. And wasn't something new for him because he had previously talked about the same thing in Scotland and at other, international economic forums. And so it just kind of set this landscape that like things around the world were changing in such a way that we should be focused on moving towards a synthetic currency. And then a lot of people started to ask, well, could that be Bitcoin? Could we go back to a gold standard? Could we do something else? And so underneath, we started having a lot of these conversations about, central bank digital currency. The funny thing is that, 3 or 4 years ago, when central bankers were already having these conversations and even having them publicly, nobody felt threatened by the conversation because, we weren't at this kind of heightened, dynamic with what's going on with Russia and Ukraine, and then this new growing relationship between the more commodity rich countries and the BRICS countries starting to coordinate more closely. But so it feels that this conversation has been bubbling in the background for years. And it's not that these conversations were hidden, but they were there. And now, because of the situation of Russia, Ukraine, because BRICS countries are starting to coordinate more publicly, we are obviously, it's coming to the forefront of a much more public and localized discourse, because now Americans are concerned about this conversation, where before it was much more a conversation that was just happening between emerging markets and main commodity exporters. And so, the funny thing is that the countries that, were already having these discussions were countries like India and Brazil and China. And now we're seeing that those countries are working more closely together. So in some ways, there's kind of a comfort that, for 3 years, this has all been in dialogue and we're still dialoguing about it. It's not like now suddenly a third currency has kind of come to exist and somehow like thrown the US dollar off of its pedestal. But it does mean that there is a clear conversation that needs to be had about what might this this non-nationalized currency look like, and how might we be able to coordinate together and, to elevate that. And I think that's why the whole FedNow and the whole conversation around CBDCs has become so urgent, because the reality is that in all of this discord over the years, I think it's fundamentally been seen that a country like the yuan doesn't have the stability or the consistency or the ability to create stable debt in order to become a reserve currency, that it's not going to take the place of the US dollar. But that behind that, then if it's not the yuan, then what would it be? And then the conversation comes, is it going to be a digitalized currency? And considering that in China already, there is so much about their currency that is already digitalized because of their social regulations and how they monitor how people are spending money and where people are going, they already have a lot of those controls in place because of the fact that they have such a strong centralized government and state, currency. And so, they have those controls in place where they're already functioning at a level of like a quasi digital currency in a way that maybe other countries have not embraced yet. But I think that has put a lot of pressure on the US central bank, on the Federal Reserve, to start, to make these moves much faster, because of the fact that, okay, if it's not going to be the yuan, if the dollar is going to take a step down, then a digitalized currency coming out of, the Fed or from the central bank could that potentially take the place. So I don't want to talk much longer, because I know that you have prepared a presentation and that this is your area of expertise. But just for our audience, I think it's so interesting and so important that, that we realize that this conversation has been going on for a very long time. So it isn't a conversation that happened today. And these things, you don't move the Titanic like a speedboat. Any changes that are going to happen globally with, a significant number of countries coordinating together that don't already naturally have a common language, common, land areas or borders, that it takes time for those kinds of economic relationships to like spring up. So so I'm very interested to hear what your thoughts and what you think, because I know you are the expert on, cryptocurrency, blockchain, and digital currencies. So I am very interested and eager to hear what you have to say on this space, Winston.
All right, thank you, Suzanne. Yeah, and thanks for that backdrop, given that history lesson and just the context of where we are now, how we got up to where we are as far as all this is concerned. So this is such an interesting area, because a lot of people are paying attention that wouldn't maybe not necessarily pay attention to digital currencies or blockchain, but because this will affect everybody in some way, some shape or form, a lot of people are starting to be concerned about it and There's a lot of noise, rightfully so, about it, both for it and against it. And so we'll talk quite a bit about that today. So yeah, again, for the audience, maybe some of you are familiar with me by now, but my name is Winston Buckley, and met Suzanne with doing some stuff with EYL, and we have since just started doing some things to get outside of it. So just a little bit of background about me. Yes, I do have a small company that's called MetaRize that focuses on blockchain education. But outside of that, before I've done that, my degree was in economics and went on to banking, and have worked at a pension plan for about almost 14 years now. So I do have this affinity for finance and macro issues and global economic issues. So these two worlds have just collided perfectly for me, crypto and these global economics, with this FedNow and the CBDC conversation. So I will go ahead and get my screen shared. Hopefully this goes without any hitch. Suzanne, can you see my screen?
Yes, perfect. And for those who are joining us on YouTube, feel free to hop into the comments, let us know that you're here, and ask any questions as we're going through, because I'll be monitoring the chat, and we'll be able to springboard those questions to Winston. So let us know what you're thinking, guys.
Absolutely. All right. So if you're interested in following me elsewhere, I have a QR code here, and that's my link tree at the bottom. So you can catch me if you want to follow things that are more crypto specific outside of our talks today. So our presentation for today is CBDCs, FedNow, and you. How will this affect you? I have to have my disclaimer in there. So I'm not a financial advisor, not licensed financial advisor. These are my opinions. So definitely you want to do your own research, make sure that you understand the topics at hand. If you plan to act, you want to make sure that you meet with your own financial advisor and do your own research about these topics. All right. So let's go ahead and dig right in. So CBDCs, let me just kind of sum up what a CBDC is. Some people may not be truly familiar with it. Some people are. So central bank digital coins or CBDCs are issued by the central bank of a country or a group of countries. The central bank is responsible for creating and managing the CBDC and ensuring that it is a secure and reliable digital payment option for people to use. Now, I have on here that is by countries or a group of countries, but it actually can be subsets of that. It can be cities, it can be counties. So really it's a governmental body, usually some type of regulatory body that issues a centrally managed digital coin. Now, Suzanne stated it beautifully. We're going to go to the CBD tracker here and take a look at some of the CBDCs that have been in development, that have been piloted, that have been launched. So if you're interested, you can go to the Atlantic Council website, and you can check out just where CBDCs are being launched, either in your area of the world, your part of the world, or neighboring countries. But they beautifully have laid it out here, this graphic, and you can interact with it. So if we just got rid of the rest of them and just show where they're launched, there are several places in the world where CBDCs have been launched. And right now that's in Africa and in the Bahamas, mostly in the Caribbean, mostly. But just because these are the ones that are officially launched, that doesn't mean that there aren't others that are in circulation right now. So if we go to the pilots, you'll see that in the Far East, there's a lot of pilots that are actually going on right now. And there's some that's in the US that are happening right now. And I'll touch on that a little bit later. But this is years of development. If you have gone to this website years ago, it was very sparse as far as what you saw, where the development was, where the research was. But as you can see, majority of the earth at some point is there at some point of either researching, developing, instituting, or they may have already launched a CBDC. So this is something that is here, is not just coming. This is not just a far off thing that, is 30 years from now. This is something that we will be interacting with very soon. So this is a good website. Again, it's atlanticcouncil.org and CBDC tracker. So that's a good resource to do. to check out, excuse me. So where are the pilots in the US? There are a couple there, actually a few more than these, but the biggest one, the most notable one is in New York. So some banks in New York have started a pilot that they're testing out, and there's one with MIT in Boston as well. So we already have these pilots that are out there. There are banks that are already instituting their own private blockchains. JP Morgan Chase has their own private blockchains. Hedera Hashgraph does a lot of private blockchains. They have their own private blockchains, but they partner with other companies to do private blockchains. And this is something that has happened for a while. But on the financial, just purely financial tip, a number of cities, a number of regions and states have already started this within. So it's not just a country thing. It could be subsets of states or regions within a country that can issue a CBDC as well. Now, at one point, stablecoins were thought to be the CBDC. So there was a lot of concern around Circle, for example, or Paxos, or some of the other the stable coins that were out there that got a lot of total value locked over the years. And some were thinking that these private companies like Circle that issues USDC, a stable coin that's pegged 1-to-1 to the dollar, would eventually become the CBDC here in America. But over time, I think some governmental bodies, some regulatory bodies, they have expressed their own concern about having a private company issue a CBDC for a country. So at one point, it seemed to be that this where the momentum was going, but with the recent bank crises and some of the things that have happened recently, it seems that governments are starting to pull away. But there still may be use cases for it. There are some that are pushing forward, but even Circle, I think themselves have said that it may not be the best case for Circle to be a CBDC for this country or any other country for that matter. So this would be kind of the use case for a synthetic CBDC where it's privately owned, however, or privately issued and managed by a federal government. But one of the things that has started to really swung the momentum towards CBDC research and implementation has been inflation. And inflation is, we talk about inflation now because we have heightened levels of inflation, and some places in the world have been experiencing hyperinflation for a very long time. So in the US and some other parts of the world where we've really kind of had the luxury to, well, you know what, let me not do that. We've all experienced inflation at varying levels. It might be higher here in the States than we want to let on. But I have some articles here up about Turkey, Venezuela, and Argentina. They have had very high levels of inflation, and which would be a true definition of hyperinflation. And for that reason, because the local currency has debased so much and so fast, then in these cases, these governments have said, well, maybe we need to implement a CBDC to move away from the unstable currency and to implement this currency over time. And so they have been a little more aggressive in ramping up the research and moving towards CBDCs because of the inflation issue. And we're going to talk about how inflation plays into moving on into a CBDC. So some of the pros for CBDCs are increased financial inclusion, improved payment efficiency, enhanced monetary policy, stopping crime and terrorism, and stopping bank runs. So basically, the federal governments or central banks in different parts of the world are saying that, hey, if we can issue this currency and control this currency from the beginning, we can stop a bank run from happening. Now, I'm going to talk about that on the con side a little later in the presentation, but that may be a benefit to stop just a run on the bank. That's one of the things that's out there. I've also heard other things like, well, maybe you won't have to do your taxes because everything will be tracked, and so there won't be this need for you to reinstate everything that's already happened, because all of this will basically be on the ledger of the federal government or for a central bank, or however it's instituted if it's a CBDC. And the improved infrastructure that comes with CBDCs is not such a hodgepodge system that it is now. I'm going to talk about that as well from getting payments from one person to the other. So there are some benefits to CBDCs, and there's a reason that government wants to do it. Now, here in the States, I know we have people that are tuning in from different parts of the world. The government and, congressmen and senators, and there are a lot of politicians that are either for or against CBDCs. There are some that are for, some that are against it. Now, this case is really interesting. I have this we're going to watch just a little bit of this video here of Senator Warren. She has been very critical of a lot of cryptocurrencies and blockchain technologies. However, seems to be favorable towards a central bank digital coin. So I just want to play just a little bit of what she has to say about that.
So for example, we could be talking about, instead of Bitcoin, we could be talking about digital currency. Now that's something very different.
I think that's different too. I buy that. I accept that.
That's right, because that's a government-backed electronic transfer. And it can be denominated in dollars, it could be denominated in euros, it could be denominated in some new language that's made up. But that has something that backs it up. It has a government that says, if at the end of the day, there's a run on this stuff, everybody wants theirs out, the United States government promises there will be something to back it up. And that's what banks are about. There'll be somebody there to back it up. But with Bitcoin, that's not the case. And then, of course,
so you can pretty much get the tone of that, and it's a decent interview that she put. You really get the context of how she feels of Bitcoin and blockchain technology versus the blockchain technology that a government would issue. And she makes some points that may be valid, maybe not, depending on how you're looking at it. But you might want to check that out on your own. So there are a lot of politicians that will say, "Hey, that Bitcoin stuff, that crypto stuff, no, that's for scammers, that's for terrorist activity, that's to dodge in a taxable system, that's to keep transactions under a rug and to proliferate things like human trafficking and just a lot of illegal activity." So they are against it for those reasons and say, well, this digital coin may be better for some of the reasons that she stated in that interview. Now, the National Bureau of Economic Research, they have a PDF, an article that they put out a while back, and this QR code there, if you want to scan that, will lead you to that article. It's about 15 pages, not a bad read though. But I just pulled out some quotes from that. One, CBDCs promise to be the next generation, and they're talking about fiat currency. The present day rise of cryptocurrencies and stablecoins suggests that the outcome may also be a process of consolidation towards a CBDC. So basically saying what is happening with the development of all these different currencies within America specifically, they have kind of led towards what would happen anyway, which is a CBDC. And then CBDCs will reduce the cost of issuing and operating physical currency. So if you don't know, there's these Federal Reserve branches that are all over the country, and they actually take in money, they shred money, they print new money, and there's employees that have to be paid for that. And there's infrastructure that has to happen. We see these trucks that transfer money from Federal Reserve to local banks and back and forth. And I mean, those are just fees and infrastructure that has to be maintained. So the idea is going digital and it being centrally managed and issue that it would be of lesser cost to local governments and central banks. And we're already moving towards a cashless society anyway. One of the things that's very interesting is that a lot of people are very concerned about what's going on, because
we had a question about we had a question about something previously on your bank runs section. Mm-hmm. So the question is if you could explain a little bit more about how is the bank, like by stopping bank runs, how is that actually beneficial to individual Americans, to the consumer? How would that actually work for them? Since digital currency is already seen as kind of a mechanism for potentially controlling how people spend or what they spend on, or like watching how they're spending their money. But then how does that actually empower them? How does it empower the consumer if these CBDCs are are supposed to mitigate bank runs? How does that actually help help the consumer?
Okay. Yeah, that's actually a great question. And yeah, I'm gonna dig into it even further in just a few minutes, but I do want to go ahead and address it. So one way that the federal government and some central banks are saying that it will help the common person is right now in America. So I can speak from the context here. You know, we have a lot of local banks and credit unions and regional banks. And so some of the things that these local credit unions and regional banks can do, the large banks, your Wells Fargo's and your Chase banks, they won't even touch these things. You know, some of the local real estate that's in the area, your credit union may finance a $40,000 mortgage, whereas a Bank of America may say, well, it needs to be 75,000 or greater. And I'm just throwing these numbers out here. I don't know if those are the thresholds, but those are some of the things that they're saying, well, if we all move into this infrastructure to have a centralized digital coin, then we can prevent everybody taking their money out of fear, like what we started to see with the Silicon Valley and the Signature Bank and the Silvergate crashes, where people started out of fear saying, and in some cases rightfully so, saying, I'm going to take my money out of my local bank, my small regional bank, and put it into JP Morgan Chase or Bank of America and Wells Fargo. So they're saying, okay, hey, we can, from a top-down level, just freeze this and keep your community bank intact and not morph into one large system. So suppose that's how to help the common person, but yeah, I'm going to talk about the flip side of that too.
Okay.
And how they can,
So essentially, if I understood you correctly, the idea is that by having CBDCs, it actually empowers smaller local regional banks or credit unions so that they have that they have consistent accessibility to liquidity, so that if people want to come in and get cash out, they're not like, trying to figure out, okay, what do we sell, like fire sale at massive losses just to get people cash. That by having those accessibility to CBDCs, banks will have greater access to liquidity from the support of the central bank or the Federal Reserve in order to minimize the pressure that consumers have, that they may not be able to access liquidity if something goes left at their credit union. The CBDC kind of works as kind of a backstop. Did I understand that correctly?
Right. That is at least the interpretation that I have. That is one of the benefits on top of some monetary policy stuff that the banks can do to keep bank runs from happening. So, but yeah, we're going to dig into that even further.
Yeah, and keep the questions coming, guys. They're great.
Yeah, that was a good one.
So back to you, Winston.
All right. So yeah, cashless society, all across the world, we're moving further and further away from using physical cash, at least in what most people will consider like the more developed countries, and even in emerging markets. Just the migration away from cash is happening more and more. And even in places where there isn't a lot of banking infrastructure, you're starting to see that people are using cell phones to transact back one and forth to another, and using things like the equivalent of a cash app here or cryptocurrencies in certain places. So here in the States, you just seen the decline from 2015 to 2020 in the use of cash, and payment cards is, the number one thing. But over time, we're going to see electronics and mobile payment apps. I think it's going to morph the credit card payment system, just that hold that Visa, MasterCard, American Express, and the likes have on that part of the industry. So just to reiterate, CBDCs will reduce the cost of issuing operating physical currency, because obviously you don't have to maintain so much infrastructure. Now, monetary integration is one thing I want to touch on. So to the second quote that I pulled from there, the present-day rise of cryptocurrencies and stablecoins suggests that the outcome may be a process of consolidating towards a CBDC. Now, these aren't CBDCs, but we've already seen monetary integration already. So in Europe, there's a euro. We've seen several currencies morph into one over time, or an adoption of one currency over time. Here in the States, the Federal Reserve Act, it really addressed the old school bank run. So here in the States, back in the day, there were individual cities, states, and banks had their own notes. And so some of these banks would just kind of do a rug pull on people and be gone. Or if people in the city felt like their local economy was unstable, they would actually run into the bank. So this was actually like a physical thing that was happening, and people would just take everything out as they could, and the people who couldn't get there in a certain period of time, then just your money's gone. There's nothing left for you. So bank runs were actually a thing here in the States, and the Federal Reserve Act of 1913 basically consolidated everything and say, we're going to back up everything by the fate of the Federal Reserve System in the U.S. economy. And then in a certain part of Africa, the West African Economic and Monetary Union, I think it's about 8 countries that use one currency. So we already have seen monetary integrations happen. And so this idea of the CBDC is, they're kind of suggesting that this is the next iteration of what is already happening. And some will say that because of all these cryptocurrencies that are rising, we have seen the system that is becoming fragmented, and we need to pull it all into one, which would be a CBDC. And then just fiat money. So I'm not going to go far into it, but currencies have failed over and over again. You can go to the Roman Empire, Tang Dynasty, German mark, the US continental. Fiat currencies, they fail. And the same thing has happened over and over again. Debasement of the currency. First, they're backed by something, backed by gold, backed by brass, silver, some other commodity. It happened in the Roman Empire. They started to debase the currency to fund wars and political agendas and things of that sort. Happened in the Tang Dynasty, debasement of the currency, German mark, debasement of the currency, inflation, money printing, US continental, same thing. So this is something that has happened over time. Is it different this time with our US dollar and the euro and the yuan and the yen? I hope so. So there's books out there, and there's theories that our currencies are going through the cycles. I don't know if that's true or not. Some people say it's different this time. Some people say, we have this new modern monetary theory, and so we have tools that we didn't have back then. I don't know. Maybe people online can interact and give your thoughts. So flip side of the coin, this is the thing that has really got, I think, more of a buzz than some of the things that can be perceived as pros. And some of these cons are privacy concerns, the idea of having programmable money from a central bank or a central government, scams and hacks that can just be enhanced and just proliferate when you just go totally digital, as opposed to cash. Somebody has to physically, and this is terrible too, but somebody has to rob you to take your cash, as opposed to going digital. And just from my years in banking, I just seen over the years, from my first year in the bank to my 6th year in the bank, just how over time, like credit card scams, and this is in the early 2000s. So now I know it's really off the chain. Centralization and wealth disparities that can happen. So what happens to the countries that can't develop the CBDCs as fast as others? And what we have seen already, even with some of the pilots and some of the ones that have been launched, they're adopting CBDCs or adopting the technology that's managed by another country. And this has always been an issue for a lot of emerging markets, for any country, really. I mean, that's the argument that we're having here in the States, the argument that's among superpowers. And what Suzanne touched on earlier is, the US wants to maintain its status as the reserve, the number one superpower, and the US dollar be the world's global reserve currency. But obviously China wants that space, Japan wants that space, Russia wants that space. So what happens to the countries that aren't superpowers, a small country in Africa, South America, that can't develop as fast and has to adopt another currency? So that's always been an issue. All right, so we're going to dig into some of these issues. Now, there's an interesting one. One of the first ones that was launched was the e-Naira in Nigeria. And at first it was just like no adoption. Like it was 0.5%. So this article in Further Africa just talks about 0.5% adoption at the end of 2022. Now that has since increased, I believe, by 63%. So it's not a huge number, but from 0.5, it's a little over 1% now. So it's not like this mass adoption has happened. But if you paid any attention to what happened in February in the country of Nigeria around the election and the freezing of banks and limiting the amount of cash that people can withdraw and stopping banknotes. I mean, it was a big mess. And so more people have adopted the e-Naira just so that they can function. And so some people are concerned that, well, hey, how there's this thing out there, well, we won't waste a crisis. Some people are saying that crises will be allowed to happen to force adoption of CBDC. So hopefully that's not the case, but that is a concern that people have. Negative interest rates have existed in several parts of the world, and some countries here in the US, we have released papers about negative interest rates. So one way to force adoption is to say, well, we'll pay you or give you a negative, let's say 3% interest rate on your cash, but give you a positive 1% interest rate if you move to a CBDC. So some people are feeling like, well, we're going to be forced onto this system because of things like monetary policy around interest rates. You have another question, Suzanne?
No, it's just something interesting. So about your comment about the e-Naira. So the other night, my family and I, we were all sitting around watching a movie, or not, over Easter, and it was actually a Nigerian movie. And it was funny that in the film, suddenly we started to realize that they were actually referencing a lot of these like cryptocurrency and digital currency. And by the end of the movie, we were, I asked my sister-in-law, I was like, did you notice, or was it just me, that they seemed by the end of the movie to be like talking about it quite a bit? And she said, yeah, I thought it was a very strange way of advertising. But now that the way that you're talking about it, it's like the two and two together, that, they're finding interesting ways of allowing people to adopt this idea of a digitalized currency but via more popular routes. So they're utilizing modern culture and modern series and film in order, and even musicians, to promote the use of the e-Naira. And so when you were just talking about it, I thought, oh, that's very curious, because now governments are obviously doing what they need to do to bring in the kind of the mentality that this is actually already part of our culture. This is already part of our community, part of our day-to-day life, so that as generations move on, that in 2 or 3 years, it already feels very natural for someone who's already seeing this in their common culture at like 14, when they start to move into their own individual, having to have their own bank account or going to university or whatnot. So so it's funny because we saw like a real life example of what you're talking about.
Absolutely. Yeah, it's kind of the one of that quotes was just talking about just kind of the reiteration of money. I remember being a kid and my mom had a checkbook, and the debit cards were really, all the banks were just issuing debit cards as to all the existing owners of checking accounts and savings accounts. And I remember my mom would say, I would never use this debit card. I don't trust that. I would like to see my money, and I'm going to this machine. I don't trust any robots. And, she uses Cash App and the debit card today. So, absolutely. Over time, culturally, and just out of convenience, people will just use things that they swore they wouldn't use just years before. So, yes, that is one way, through culture, through convenience. Hopefully, there's not these extreme measures, but I mean, that's one of the concerns that people have. Negative interest rates, or even just saying, okay, your money will expire at a certain time. And that's what happened in Nigeria. Certain notes, they were saying, we're stopping it on this date. And I mean, people went berserk. So, it could happen. It could happen. That's something to be concerned about. Now,
yeah. The reality is that, countries have learned a lot about how to transition from currency to currency, from things like, moving into the Eurozone, and the entire European Union having to do away with all of their individualized currencies. And when I was living in Cyprus, we were under the Cypriot pound. And then for like 2 years, we had this very strange, like progressive system where, so everything started out with the Cypriot pound, and then they had both currencies side by side, the euro and the pound. And then after about a year and they accepted both currencies, and they had this transition period where they were getting rid of particular notes until basically it was just, people had then this like final limit where, okay, you have a month where you have whatever you have, go to the bank and exchange it for euros. And now we're not accepting any more Cypriot pounds. But, because of all of those transitions to different currencies, new currencies, even when, you have the inflation issue, and then you want to take off like zeros from your currency in order to, and then print new currencies, it takes a long time to kind of work those things out in the system. And people forget that. People forget that, you have an entire economic system that's is working on one thing, and you're trying to create a very natural turn into something else, so it doesn't create frustration and chaos. So, but people know how to do it. I mean, governments know how to do it because they've learned so many lessons from the last 10, 15 years. But hopefully they don't have to do anything crazy to push people towards progress.
Absolutely, yeah. Hopefully not. Now, this is the stuff I kind of dip my toes in the political stuff, and then I dip back out because here in the States we have Republicans and Democrats, and I don't rep the red or the blue, the Crips or the Bloods, like one of my friends says. But it's funny to hear that on this particular issue, you'll find people on both sides of the aisle. They are very concerned about this. So you have some that are more extreme, like I have Glenn Beck and Kiyosaki here. And I guess, maybe I need to start putting my thumbnails like this and just have like a crazy, grumpy face, and maybe I'll get some more clicks if I start doing that. But you have them saying, like it's over, like you're going to die, and this is coming, and just be afraid, be scared. And then you have like DeSantis, who is the governor of Florida right now, is basically saying that Florida is not going to participate. So we're going to see how this is going to end up, and what's actually going to happen when it's time for these things to be implemented. So it's going to be a very interesting case. My thing is just kind of relax. Let's all just calm down. There are other things that are. This is big. This is not something to just brush under the rug, to not have any concern about, to not think about. But I do want people to just kind of relax about it, just for a number of different reasons. One reason is around privacy. Now, I am concerned about my privacy. However, working in banking systems, just working for several systems that manage a lot of customer data information, if you use any of these things that are on here, then you've compromised a great deal of your privacy already. There is a bunch of documentaries that are out there. Just go on Netflix. Netflix, has an affinity for documentaries that talk about infringing on your rights. So if you're into that thing, just look how your debit card, how your metadata is used. If you're on the internet, if you're interacting on YouTube right now, you have given up a lot of your data already. There's thousands and thousands of data points on you already. Here in the States, we have Social Security card and ID cards. So between these things, if the government wants you, they can get you. Like it's, unless you're like one of the Alaskan bush people and you're off the grid, sovereign citizens, those type of things, and you're just like, I've totally disconnected, you are already giving up a bunch of your privacy already. I'm not saying that that's okay. So that's not my point. I'm not trying to say that, but it is something that, when we're talking about going from one iteration to the next, just think about how far down that hole we already are. Now, when it comes to crypto, one of the biggest arguments, and this is where my crypto bros and sisters are really going to be upset with me, but one of the things is like, okay, I'm anonymous because, I'm over here and this is separate from the traditional system. But I have 2 articles here. There, I can pull up a bunch of articles that just talk about how the blockchain has been used to recover hacks on chain. And because it's open, it's an open system. It's meant to be a general ledger that anybody can check and transact on and look. And this is one of the benefits of, now, the benefit of cryptocurrencies and blockchain is that it's open and anybody can check anytime. You can't do that with your bank. You can't go to your bank and say, I want to see every ledger. I want to see every transaction. They're not going to do that. But with crypto, you can. But for that reason, when people do criminal acts on chain, they can be busted. And that is one of my things whenever you hear politicians say that all this nefarious activity that people are going to be doing because they're using crypto. Well, good, because now we can actually track them down and find when they're using crypto to try to skirt the system. And it's because of block explorers like Etherscan. I mean, there's one for every blockchain, Bitcoin, Polygon, you name it, they have block explorers where you can see every single transaction on chain. So if you're thinking that you're going to avoid taxes by using crypto, think again. That's not how this works. So again, just kind of relax about it all. It's coming. We are going to be using it. So just a little quick stuff on FedNow. I'm just going to play just a little bit of this because I know we are brushing up on our time here. But you know, it's just
in today's fast-paced world, time is money. More people, businesses, and organizations are demanding instant payments. That's why the Federal Reserve is developing the FedNow service, a safe and efficient instant payments infrastructure that will modernize the U.S. payment system. The FedNow service will give financial institutions the opportunity to innovate, enabling their customers to send and receive money in seconds, 24 hours a day, 7 days a week, 365 days a year. Funds will settle between financial institutions in real time, which means there's no buildup of interbank obligations, and end users will have access to the fund in seconds. How will the FedNow service work? Imagine the owner of a coffee shop is running low on coffee beans and needs to schedule a quick delivery. She places an order, and the coffee bean company sends her a request for payment. She responds to the request for payment and pays for the coffee beans right then and there through an app from her credit union, which uses the FedNow service. Once she initiates the payment, her credit union screens the payment and sends an ISO 20022 compliant payment message, either directly or through a service provider to the FedNow service over the Federal Reserve's Fedline network. The FedNow service instantly validates the payment message and passes it along to the coffee bean supplier's bank. In real time, the supplier's bank confirms to the FedNow service that it intends to accept the payment. And the FedNow service debits and credits the master accounts of both the shop owners and the coffee bean supplier's financial institutions or the master accounts of the correspondents. The FedNow service also immediately sends a payment message with an advice of credit to the supplier's bank and notifies the shop owner's credit union the settlement is complete.
all right. So I like to listen to things in double time speed. So if that was too fast, you can just look up the FedNow commercial. It's on YouTube. But basically, it's a messaging system to settle transactions. And this already exists. So it's not like this doesn't exist already. Swift and ACH. A lot of us use one of these two systems. Most of us use ACH. If you get direct deposit, you're using ACH. If you're using bill pay, you're using ACH. And so the FedNow system is a way to enhance the infrastructure that already exists. So this is not like, you know, to Suzanne's point that she made earlier, this is not just some new thing that they're just plopping on us. This has been in development for years. The ISO 222 or 20,022, however you want to say it, this has been developed for, I think, a decade now, and is now being implemented over time in countries. And so that's one of the messaging systems that's used. So just kind of a quick breakdown right now with Swift. Swift is an old system. I believe it may be 100 years old. And basically, when you want to send money from one bank to another, you are either going to do it over the ACH automated clearinghouse or through Swift. I'm going to use Swift. So this is sending like a wire transfer. I remember sending wire transfers at the bank, and you know, there's this waiting time. So a person comes in, I want to send $10,000 to this bank. A message goes out through Swift, and then the bank settle it. And if they have an agreement with each other already, reconciling accounts with each other, and they're on the Swift system, then that can happen within a few hours, or it may be a day. Now, the problem comes in with Swift is when it needs to go to several banks. And an example that I use is a lady that I used to build websites for. She had some students in Africa, and I can't remember the country in Africa. But their banking system wasn't that good there. So she said whenever she would send a wire, it would take 7 days, sometimes 14 days. And then in certain times, it would just get lost in the system. And that's because there wasn't there's reconciling accounts between the two banks. So it was going from to the Swift system to another bank, to an intermediary bank, and then to another intermediary bank, and to another intermediary bank. And every time that happened, it got more and more expensive. So sending $1,000 may end up being $700 by the time it got to somebody. So it was slow and expensive. And that's the infrastructure that exists. And that's what FedNow and the ISO 200-2020 is aiming to fix. And right now, like when you send payments to a merchant or to another person, it's going through all these different systems right now, and there's all these little fees. So an example I like to use is if you go into, like, if you go into the hood and you go to a convenience store in the hood, a corner store, like we would say in New Orleans, then if you want to use your debit card, they're like, it needs to either be over $5 or you're going to pay a 3% fee, because they just don't want to pay the network fees. And so right now, there's all these networks that a payment has to go through. So with the FedNow system, they're saying that basically it's going to be top down and everything is going to be connected, and it's going to reduce these fees to almost a negligible point. So you got something you wanted to interject with, Suzanne?
Yeah, sorry about that. Yeah, it's perfect timing. So someone was asking, with the digital currency, will it be finite the way Bitcoin is, or will it be basically that there's infinite amount of CBDCs the way the US dollar is at the moment? Like how will that infrastructure work? Will having CBDCs allow there to be greater, let's say, more stringent rules regarding money printing, essentially?
No. So basically, CBDCs, and not to mix the two. So the FedNow is the infrastructure system that the CBDC live on, kind of like, what the stock is to the stock market, right? So no, it's not going to limit anything. It's not like Bitcoin where there's the scarcity that exists on there. It's going to allow central banks and governments to be more efficient with whatever monetary tool they want to use. So if that means doing quantitative easing or tightening, then they can do it even quicker because they don't have to now they'll still send the money to all the local banks, but everything will be on one system with the same messaging. So it's going to be quicker to implement the things where, now they have to buy the bonds back and forth from these different banks and all this stuff. No, it's going to be very efficient if they want to add more commas and zeros or take that out of the economy. So no limits.
I think that sometimes a misconception regarding money printing is that it's actually the Fed that's printing money, but it's actually commercial banks that are writing to the Fed these different securities that then the Fed is basically buying up, and that is creating this source of liquidity into those larger commercial banks. So as long as the central bank is, or the Fed is actually encouraging the creation of securities and they're actively buying them, then they will still be managing that process. And actually, with the now, I think it's called like Treasury Now, or the new Treasury website that makes it's so easy now to even set up your individual money market fund, to go and like open an account at your bank, a money market fund from your bank, or to even go directly online and start buying bonds or T-bills, which that entire infrastructure, I mean, just like even a year ago was so complicated that as an individual citizen trying to purchase any kind of treasury was a nightmare. But they've also improved that entire system. And now it's just like setting up an account the way you would, at a broker or at a bank. You can do the entire, go through the entire process online. So just the how efficient the entire system is becoming, not just from the side of CBDCs, but also from accessibility to treasury bills and accessibility to bonds, and then that relationship even between those larger between the Fed and those larger commercial banks that are putting out mortgages and securities. So yeah, it's not just a function of the central bank, like printing money. What it feels like, there's this other process where actually the commercial banks have to create these securitized loans that the Fed is then turning around and buying up, and that's what creates money in the system. And then at the speed of which they're doing that is what creates that easing of policy or that tightening of policy, if they're letting those securities roll off and forcing banks to actually find other purchasers that aren't them as the Fed. So that process won't change. It will just be faster with this digitalized process. That's from what I have understood. So and it seems that that's what you are confirming. So
Yep.
yeah, so the inflation problem won't change if Congress still allows the Fed to function in a way that allows them to aggressively pursue quantitative easing as they previously had been. But I think that now with the current economic regime, it's unlikely that we go that far back to like the zero rate easing policy and aggressive stimulus, because everybody now feels the burden of what we have, what has been created by all of this unnecessary stimulus pumped into the markets.
Yes, indeed. Absolutely. Yep. And that's perfect. What this is going to allow is a more efficient part of that process right there. So like one of the things that, was so concerning around the Silicon Valley bank issue in it happening on the bank run started, I believe, on Thursday or Friday. And over the weekend, all these companies were freaking out. And, there was this waiting period because the bank didn't open until Monday. And so this slide here is my last two slides that I have. Crypto's influence on all of this is because it's 24/7. And it's the way that you can transact, and it's seamless, has influence. I will stand on this, but it's influenced the way that central banks, federal governments, local banks, institutions, companies, they have looked at this and say, well, hey, what if we had some of these instant settlement technologies that these blockchains have solved over time? We don't have to wait until Monday morning or, just really sweat over the weekend to try to do something as soon as we can. There can be meetings to happen on a Friday night to get things done if that needs to happen. So yes, whether it's quantitative tightening, easing, or whatever monetary policy they want to institute, they can do it much sooner. If they need to buy things back and forth, they can. So this is crypto. Oh, good.
And yeah, somebody else brought up in the chat a very interesting point that, right now, everything that we do, when we're receiving anything from the government, we receive checks, whether that's, like tax returns, whether you're on any kind of benefit or supplement from the government, child benefit, that likely if they did want people to move into the FedNow system so that they were in part of that ecosystem and getting used to it, that would be the fastest way to get as many people as possible into the FedNow system immediately, by essentially moving them into that if they want to receive any kind of benefits that comes from any part of any really public institution. And maybe they'll do that even with like universities and colleges that are state run. Anything that it will involve the state will have this process to it. So
absolutely
good point.
Yeah, I used to joke about that quite a bit, but that is a valid point, because most people will make the decision that, okay, if this is the way that I get whatever type of benefit that I have, whether that's a Social Security benefit, whether that's SNAP, food stamp benefits. Even if we're talking what is considered corporate welfare, if they say, okay, you need to take this $100 million on this CBDC through the FedNow system, so that's the part why I just been saying, like, let's just kind of, not get too afraid about it, because those are the things that are going to happen to migrate people on. And so it kind of already exists already. I got XRP up there for the XRP Army people. I know people love XRP, but there's a settlement layer that already happens between countries. And so you can go to FedNow, you can look at who's using it. They have a pretty good website as far as all the companies that they are using. There's digital wallets on there, as cryptocurrency companies as well. So they have been doing a lot of work on this for a long time. So lastly, most people don't care. My mom, does not care about how Cash App works. She does not care about how her debit card works. She just wants to know that when she goes to the grocery store, that if she pulls out her debit card or if she wants to use Cash App or whatever, that it goes through. That's as far as, so the average person will not care. Self-custody is hard. You know, I do believe in self-custody, especially for your cryptocurrency assets. But even for me, I've been doing this for 6 years. It's not easy. And there are times where I'm still sweating in front of the screen, hoping that I don't lose my money because I fat finger something. And so it's not for most people. Most people will not adopt that. More than likely, you're going to use it for some of those reasons that you just said, Suzanne. And, you know, what all the alternatives? Are we willing to really extract ourselves out of a system? So, you know, that when you really start thinking about that, if it means, you know, your child going to a public school or not, if it means you participating and be able to transact with, if you own a business, I mean, people are going to make decisions for their employees, for their families. And so we've seen it during the pandemic. A lot of people made choices that, you know, very hard choices, personal choices, because it benefited their family or their business. So, you know, let's think about it all. Let's all win together, and, you know, let's just try to move forward with information and do what we can. So that's my take on it all. Oh yeah, and if you like what you saw, please like, subscribe here to Trade Speak Easy, and also to MetaRize.
Yeah, I agree with you. I think that, you know, too often the whole conversation around kind of progress often starts with some, I don't want to say fear mongering, that's probably too strong of a word and maybe impolite, but, you know, there's this trepidation that if things change, they're changing and they're getting worse. They're not actually changing and getting better. But, you know, I remember, and I think our first conversation, you know, I mentioned, you know, when I was, you know, in my work, we work often with the UNHCR. And one of the big things that, you know, we always end up with whenever we're in these kind of high stress crisis situations, whether it's wars, earthquakes, whatever, you end up with these like locked supply chains, and you end up with a glut of things you don't need, and the things that you really do need, you end up missing. I remember during the beginning of the war in Syria, we could not get like baby formula. It was like the nightmare of like every NGO was, how can we get baby formula? And because of the stress of the war, women were not actually producing milk. So the women weren't able to breastfeed. They weren't able to get access to nutritious, you know, baby formula. And so it was this whole kind of conversation about, you know, what are we going to do? And I remember at the same time, that's when they started implementing blockchain to monitor what all was happening in the supply chain, and then using, you know, coordinating with local grocers and so forth. And the efficiency that it created was, I mean, all of us could just immediately feel the difference. We were able to cooperate more with local grocers instead of using foreign suppliers. We were able to then work with them to make sure that, you know, they had the supply that they needed. And then that we were able to, you know, send out the payments to, you know, refugees or those or internally displaced persons, so that they could get whatever they needed from the local store. And just the efficiency that it created was phenomenal. Now, of course, it did create a lot more efficiency in the system that like people couldn't, you know, get double funding or couldn't get double food stamps. Because now, so there was so much more efficiency that it, in a way, you know, some people were a bit frustrated because they had figured out a way to maybe game the system, and the benefits were not enough for people to just, you know, live a luxurious life on. It was, even though you were getting some kind of support from Caritas or the UNHCR or another organization, it was never enough. You still felt a lot of pressure. So people were always trying to find ways in the system to like squeeze out as much as they could. Now with the efficiency, then, you know, a lot of refugees felt very frustrated, but at the same time, we ended up where we could actually, you know, get the items that we needed to people, which we felt was a massive support, because you don't want to be stranding mothers with newborn babies. They don't have a milk supply, and you don't have anything to offer them besides cow's milk. And even cow's milk could be very expensive and not necessarily readily available at any time. So just the efficiency of it all, sometimes it can feel very scary, but it doesn't have to be. We don't have to talk about it in that manner. We can look at how, technology has, yes, it has its negative sides, but at the same time, it's also created a lot of accessibility to information, accessibility to other communities, learning opportunities, and efficiency in the system. And I think that, the Fed is under a lot of pressure, as I shared at the beginning, that, in the beginning, so 4 years ago, when this conversation of a digitalized currency was starting to come up as kind of the third player, so that, maybe like the United States and, well, the US dollar, the euro, the Canadian dollar, maybe the Aussie dollar, they would combine, create this basket similar to what we have with the DXY, and that would then be elevated and have this kind of digitalized currency that people could denominate all of their trade in. And when I think that over these last years, there was a lot of, pushback against that, and the US was slower to the plate. Now we have seen, a country like China that was very aggressive, and they were already implementing this very much in their own country. Now they've actually, in a way, even though no one would have expected the yuan or even a, yuan backed digital currency to be a national reserve digital currency, or sorry, a global reserve currency, that, that thought pattern has changed. That conversation has changed quite massively. I don't necessarily know that that's what's going to happen because of the state controls that China implements and the lack of transparency. Then, do people really want to denominate all of their commodities and futures trading in, on a digitalized yuan? I don't know that we're ready to go there. But the US did did kind of delay a significant amount of time. So I think that they're feeling the pressure. They were working hard to get this out. And now I think that they might have wanted a bit more lead time to get the public like on sides and, believing in what they're trying to do. But this is a race against time. You don't have, we don't have forever to make decisions. If we are not going to be the most innovative and the most aggressive at pursuing innovation and being at the cusp of innovation, then we are going to lose those opportunities. And so at this point, I think that, we were able at the last moment to get, to move forward with get it FedNow, and then, talking more about CBDCs and getting the US dollar digitalized. So I think that, we are making progress, but it's a progress that the public, I don't want to say that the public shouldn't push back on. The public should want information. They should want transparency. They should want public discourse, debate, but at the same time, not in a manner that makes politicians think that we shouldn't move forward as quickly as possible, because that is when we give a significant window of opportunity to other countries. And that is when we will see the US dollar. That's when we could see weakness in the US dollar. And as long as we can, keep ahead of this part of the game, then, and we can keep, our high level of transparency and just our systems in place, I think that will push the US dollar back to its position of strength and tamper some of this kind of broadening conversation about if the US dollar is losing its reserve status, is it going to continue to have its reserve status? I think that those conversations will temper a bit because of the fact that the US will continue to push forward, but it will need public support. And, unlike some countries, we have elections very often. So in the United States, it just constantly feels like people are it's not just that we have elections, it's the fact that we don't regulate how long people can campaign. So campaign trails, they start like years before actual elections. Other countries have very strict regulations that, like only 1 month before a particular election are you allowed to start campaigning. And so, now this is where, politicians are going to come out and start having these really intense conversations. And I hope that they do it in a manner that is truly beneficial to the position of the United States and the US dollar and the world as the world reserve currency, without using it as an opportunity to fearmonger and then create greater disunity and dissonance and just noise in the conversation. Because right now there's a lot of that, and it's just unnecessary because it is disempowering. Actually, it's taking away the power of the US dollar and the labor force, because we're all working and earning in dollars, and part of what empowers that is the fact that we are the world reserve currency. We don't want to lose that. So it's important that in this coming season that, I don't want to say that the public gets on sides. Like I said, be skeptical, ask the questions, but get involved in the discourse in a proactive and a productive way, so that we as a country continue to move forward and maintain our excellence in this space. So I really thank you for coming on, sharing that. And then the fact that, like you share your ideas, I share my ideas. The fact that both of us, like, said, we don't have to be so worried. Like worry is not really the best response. We can be skeptical, we can ask hard questions, but to be constantly worried and nervous and anxious, those are not the feelings that create productivity and creativity. So I think so I'm glad that was also your point of view on, like, from your own opinion, because I don't tell you what my thoughts are and you don't tell me what your thoughts are before we hop onto these calls. So I really appreciate that both of us came to this, like, from our own research to pass on the message to our audience, to the members at the Trade Speakeasy or anybody that is listening, just to say that, yes, things are changing and they're changing quickly, but sometimes you have to move quickly when you want to be first to the plate on such an important issue as a central bank digital currency, or even just creating efficiency in the overall banking system. So
Yeah.
For anybody that's watching later, hop in the chat, tell us what you guys think, ask any questions. We'll continue to monitor the chat and get back to you with any feedback. If you aren't already subscribed to the channel, like, subscribe, tell us your thoughts. And yeah, we're here on a monthly basis. So, if there are other topics that you want to cover on cryptocurrency, let us know your thoughts. Thank you again, Winston, so much for joining us and for sharing in this area of your expertise. It is beneficial to all of us at the Trade Speakeasy. And I'm sure also your audience at MetaRize appreciate having the opportunity to hear from you often.
Oh, you're very welcome. Yeah, this was fun. And I know this is probably won't be the last of this particular conversation as we start to step into that world. But yeah, absolutely. You put it well. Let's not walk forward in fear. A lot of stuff we use is from the government, highways, the internet, payment rail. So it's the new thing, where we need to push back, let's push back. But other than that, let's adopt and go forward.
I like that. So we will end on that note. All right, friends. So we'll say goodbye for now, and I hope you guys have a wonderful weekend.
All right.